You ever wondered how much damage does the estate tax and the inheritance tax do to families and their generational wealth? Well, you come to the right place, although the answer is probably not going to be what you're expecting. Hi, my name is Dohn Thornton. I'm a senior trust specialist. I'm also a real estate investor. My mission in life is to educate people on how they can use the legal means to be able to 100% shield themselves and their assets and their family from lawsuits, and to be able to reduce their taxes by almost up to 97% of their net income. In this video, I'm going to tell you a couple of very tragic, sad stories of people who unfortunately did not know how to protect their generational wealth, and when they passed on, their families were not able to get what they should have inherited because the IRS takes almost 50% of what of what the value of the property is. And then after that, I'm going to tell you about the solution and why you can just, for one-time investment, you can shield yourself from any kind of estate or inheritance taxes. So the first story is about an Englishman who immigrated to America. He went to Texas in the 1860s. I mean, it's an American immigrant story. The American dream. He came over with hardly anything, worked as a ranch hand, saved his money, and then he eventually was able to buy 3,000 acres of ranch land, which he then turned into his ranch and bought and sold cattle and did what you do. And back then it was very good living, obviously. And so he was able to pass that down to his children, and they passed it down to their children. So everything was fine and dandy until the fourth generation. By that time, the only survivor, inheritor of the ranch, was his daughter. And unfortunately, when she passed, it went to her son, but there was no estate planning on this. They didn't have, I mean, she had a will, but there was no means or mechanism or planning to be able to have her son inherit the property without having the inheritance tax come in and take a huge chunk. And boy, it was a chunk. They had to pay. Well, what happened was the IRS came in and did their own evaluation of the ranch. It was overvalued much more than what they felt like it was worth, but they didn't have any recourse, so they owed 38% of what that valuation was, and they had to pay $1 million deductible. So the son, the fourth generation owner of this land, had to go deep into debt to be able to make these payments. And it was very difficult, but he scrapped and scraped, and he was able to keep it going at least. Well, when he passed away suddenly in 2006, his daughter was left with everything, and she tried her best to save it because she's fifth generation, right? That's a family heirloom for them. And she tried the same thing, and she set up a payment plan, and she finally just gave up. And she could not keep it, going anymore, because I mean, she had not one but two huge payment plans that had to do with two separate probate, actually not probate, but inheritance tax issues. And so, they lost the farm. And what happened? Well, a corporate farming company came in, bought the land up, and again, one more family ranch here, one more family farm disappears, taken over by corporate America. So that's tragic. Now, I want you to stay till the end of the video, and I'll explain to you the solution that can take care of all this stuff. But in the meantime, I would love for you to go down and hit the subscribe button. I love to see my subscribers multiplying like little rabbits, and because that means that it's a reflection on me that I'm giving out good content, and that's the main things I want to make sure that I'm giving you guys good content. So subscribe and hit the little bell that you get notified whenever one of my videos drops. Now the second tragic horror story that happened more recently was there was a woman in New Orleans, and she was a community activist. She believed in her cause, and her mission was to have Section 8 housing available for people in her ward. Because what they call them, that's what they call little districts in New Orleans. They call them wards. So she bought a very big building, and she would only rent to Section 8 tenants. And it was great. I mean, that was such a refuge for people who didn't have much in the way of money. They're good people, and she made a nice living on that, and she was doing good, and she was able to further her community activism and so forth. And Katrina hit, and it did a lot of damage, and she had to rebuild. But even that once in a generation hurricane couldn't keep her down, right? And so she started getting older, and she wanted to try to make sure that she could leave something for her children. I think she had 2 kids, adult kids, obviously, but she wasn't able to finalize her estate planning, and she died suddenly. And so, very similar to the previous story I told you about, it was too expensive. The estate tax was way too much, and so what ended up happening was it went to auction, and who do you think got it? A developer. So they kicked out all of the Section 8 tenants, and they did some kind of a investment project. I don't even care what they did. All I know is that this is what happened. The woman's dream went up in smoke because she didn't take action. Maybe she didn't know a way to be able to get around this. But regardless, that was the result. And like I said, stay tuned after this break, and I'm going to tell you what the solution is and how you can do the same thing for your generational wealth that you want to pass on to your children. But in the meantime, I'd like for you to subscribe. I'm sorry, leave a comment. So the one thing I love more than subscriptions is when people actually leave a comment. So tell me how I'm doing. Do you have any questions? Do you have similar horror stories? I just like the engagement, and frankly, for selfish reasons, it helps with the algorithm. So if you could do me a solid, I'd appreciate it. So let's talk about the solutions, because I'm not someone to wallow in sorrow. I'm always of the mindset, okay, what can we do to fix this? And my mission in life right now is to educate people like you who are watching this, to let you know that there is an amazing solution to the story. And frankly, if Americans of decent means knew about this, and they had something they want to give to their children when they pass on, they would all buy this and invest in this, because it absolutely will completely eliminate any estate or inheritance tax issues. And what is it? It's called the non-grantor, irrevocable, complex discretionary spendthrift trust. This trust has been around for hundreds of years, and it has been basically the tool of the ultra wealthy for, like I said, hundreds of years. It only really started to trickle down to Americans of lesser means. Let's put it that way. I mean, not poor, because if you're poor, you don't need it. But people that do well, $200,000, $300,000 or more a year, certainly can use this. The main thing about this is that this trust is set up, for many reasons. But one of the reasons is to make sure that inheritance tax never comes into play. So how does that work? Well, let's say if the community activist in New Orleans whose dream went up in smoke about her Section 8 apartment building, if she would have sold that into a trust, this trust, and she would have, she would be the trustee, then the apartment building would become an asset of the trust, which she as trustee, she would be 100% in control, but she would no longer own it. But control is more important here. But most importantly, she can put her children into the trust as beneficiaries, and she could name one of them as her successor trustee. So what does that mean? That means if she died suddenly in real life, in this scenario, if she died suddenly, then the beneficiary, one of her children, would have taken over as trustee, and that apartment building would have stayed in the trust as a trust asset. And then it would not have had any tax whatsoever, no probate, no, they don't have to have a will. All you have to do is just have an operating agreement for the trust, for the successor trustee to follow, and then everything would have been protected. And it's so much simpler. It's an elegant solution. And you know what? The trust not only is 100% defender in court for anybody who tries to sue it, except in cases of fraud. It also has amazing tax advantages where literally there's no capital gains tax when a trust sells one of its assets. And if you have an income stream, if you have a business, you can run everything through an LLC, and the LLC can transfer up to 97% of the business's pre-tax net income into the trust, and that would be that tax on that would be permanently deferred. And last but not least, what we're talking about in this video is that you can pass down your legacy, and it may not be $1 million. It may not be an apartment building or a ranch, but for those of you who do have something that you would like your children to get, money, stocks, bonds, gold, crypto, real estate, it doesn't matter. When you have it in the trust and you're the trustee and you set this thing up like we can teach you, then you never have to worry about that. And that's the beauty of this. So if you're interested, you want to learn more about this, go to the website in the description and you can click on that and you can schedule a free strategy session with me. We can go over what your situation is and I can show you how you can protect your assets and save tremendous amounts of money on your taxes. And I want to help you get that, because why should the rich have all the fun, right? And I'll see you next video.